With Bitcoin sitting under 28,400, the bears are still in control. With less than 24 hours remaining on the monthly candle close, are the bulls going to be able to reclaim this control and push the price upwards? Let's go ahead and find out. Okay guys, welcome back to the channel. Thank you so much for tuning in. I hope you're all having a fantastic day today. In today's video, we are going to be talking about the monthly candle close. We're discussing the daily trend and the smaller time frame trend, discuss exactly what we need to see for the bulls to reclaim control, because the trend is quite bearish on both a macro, on a short term, and on a daily chart. The bears do still have control. Before we get into it, smash your like button, hit the comment button, and subscribe to the channel, guys. We do daily videos on Bitcoin, focusing on the facts, the data, the technical and structural information, news events, and the economy as a whole. If you're interested in this kind of content, smash your like button and join us on Telegram. The second link down below, you've got access to our updates, our news events, our videos, everything in between, our charts, and everything, guys, to keep you up to date with the markets and Bitcoin as a whole. We don't focus on emotion, we don't talk about bullshit, and we definitely don't try hype anything up. Pure, raw TA, objective, factual, and probability-based stuff. That is what we talk about on this channel. No personal opinions, no emotion, no biases. Again, if you are interested in joining up that Telegram channel, that is the second link down below. You can see we got a bunch of stuff in here, guys. We keep you updated with everything. If you're interested in joining our VIP channel, we do have a sale at the moment. We have less than 12 hours remaining. We do have access over here to all the information. You can go ahead and contact me by clicking this name over here, this @ symbol. You'll get access to our main trading channel with over 600 members. We have exclusive trades of entries, targets, and stop losses. You'll have access to our group chat as well. All membership information and our past trading track records can be found over here. Without further ado, guys, let's get stuck into the video. Because again, today we're focusing on the charts, the macro, the short time frame, and the daily chart. More specifically, talking about this monthly candle close. What will it mean if we close this bearish? What impact could that have on the higher time frames? And can the bulls still spin it around? So we'll start off with market data before we get into it. As we can see, for the month of May, we are down 5.38%. Now that really isn't too much of a big problem, because the monthly percentage return isn't really what we're looking at when it comes to TA. It's interesting if we're looking at, historically what months are more bearish than others. But what we are really looking at over here, guys, on the higher time frames is the prior monthly open price. That is kind of that key bullish trigger. We're going to go ahead and draw it up a little bit higher. We can see it sitting around 28,460 to 28,500. That is going to be the key monthly resistance in which we need to close a candle above to actually close the current candle bullish. Because right now what we are seeing is a bearish engulfing candle, meaning this monthly candle is showing significant weakness in comparison to the prior candle. And when we see this bearish engulfing candle occur after a large move upwards, it can potentially signify a reversal. Now, it doesn't always lead to a reversal. Obviously, trading is never a game of certainties, it's a game of probabilities, but in most scenarios it can either lead to a reversal or facilitate an environment in which a reversal is occurring. Because what it signifies is we have strength and then we have weakness over here, and that weakness has now developed into bearishness. Okay, so we have strength, these large green candles, followed by this smaller green candle at resistance, and then we have a red candle engulfing that, signifying that weakness, which was developed at resistance, has now actually turned into a downtrend. So we'll be talking about, what this means for the charts, and of course, what we need to see moving forward. Let's go ahead, guys, and get back into the charts over here. As we can see, for the 24-hour volume, we are up 8.75%, sitting at 62 billion, and 24-hour liquidations following suit, up 9.37% at 54 million. Not too impressive, not too insane. Markets still consolidating, waiting for the new week. Looking at the volatility index on the 30-day volatility index, we can see the volatility did see a little bit of jump up, which was expected as the price did move up quite a bit. We saw liquidations explode, but it has now come back down. So again, we didn't really see the surge in volatility we really need for that price to push up aggressively, and we definitely need to see this volatility index start to move upwards. We do have a bit of a plateau on the volatility index on the 60-day, which is a good sign, but again, this is a 60-day, so it takes the average volatility over a 60-day period. To find the current volatility, we need to look at the current momentum. We'll be doing that in our analysis today. Moving on to liquidations, according to the liquidation data, we can see out of 54 millions in liquidations, we have had just over half of those liquidations occur in longs. Again, a lot of people taking late longs at 28k, at just under $28,000 at resistance, when in reality they should not be doing that. They should have already taken those longs according to the charts, according to our breakout which occurred at this resistance over here. That was the long potential, and then again, while we remain under this downside resistance, we should be looking for shorts. We should be looking for the price to move toward the downside. We'll come back and discuss all of this in today's video. DXY is doing pretty much exactly what we did expect, and we do still expect the trend to continue upwards. If you've been watching the channel, you would know we expected a breakout according to our double bottom formation. We saw that breakout. The trend has developed this uptrend. The uptrend is represented by this diagonal arrow you can see over here, meaning this is our current uptrend, right? If we lose this uptrend, the price will go down. Whilst we remain above the uptrend, we have to assume the uptrend is intact. The trend is our friend, and the price can continue with the trend until it is proven wrong. Therefore, the next logical target, according to the uptrend, is going to be the next liquidity zone between 105 and 106, as represented by our prior rejections and supports on the DXY. So we're looking for a continuation to 105 and 106. That is our next immediate target. If the price happens to break down from this trend line, that is when we expect this target to now be invalidated and the price to move towards this lower support. We could definitely see a short-term pullback to retest that uptrending support line, and then a continuation like this, or we could see a straight continuation. Either way, it doesn't matter. The direction is the direction, the trend is the trend, and the targets still remain the targets, and the invalidations still remain invalidations. What happens in a small time frame is completely irrelevant for the DXY. Looking at the DXY and looking at the economic data that we do have coming up, we do have a few pieces of economic data. I'm going to go ahead and scroll up to it in the free channel. Give me one moment, guys. I think we have NFP coming up. We can see over here, we have unemployment data on the 2nd of June. This is Australian time, GMT plus 10. And we have NFP coming up on the 2nd of June. Both of these events, guys, are very crucial leading indicators for inflation. If they do show bearish signs, if they do show signs of rising inflation, we can expect the DXY to rally upwards, and we could see the stock market and cryptocurrency still come down. So these events are ones we're looking at on the 2nd of June, which is in 3 days' time. Keep your eyes on it. If we do look at the past data, we saw PCE, we saw personal spending and personal income all suggest that inflation is back on the rise, all being leading to suggest that inflation is rising. And if that continues, we can see interest rates potentially be hiked for a second wave. Looking at the stock market, we can see the price has broken over our resistance level, but again, no weekly candle close yet. We have 18 hours to go. If we do not close a weekly above this level, expect a continuation back downwards. We will not find support again on this trend line. Okay, we've had 1, we've had 2, we've had 3, we've had 4, we've had 5. We've validated the structure. We're in a verified uptrending channel, which is a rising channel formation. Therefore, if we retest this level again, we will definitely not hold support. There's a very low chance we hold support. It's incredibly slim according to market structure theory. It would be around a 20 to 30% chance we hold that support, and a 70 to 80% chance we actually drop below. According to our measured move target of this range, the measured move targets will take us towards this next support at around 37,000. So we do have at massive risk of a huge correction for S&P 500 if this uptrend does break. But until then, the uptrend is still intact because we are in an uptrending channel. So if the price can push upwards, if the data from the DXY actually forces the DXY down, we could potentially see the S&P 500 go up and retest this upper range, which you can see at 4,300. The key levels we need to watch are this red resistance here, okay, and this uptrending black line. Moving on. Dow Jones, you can see it has been struggling a little bit compared to the S&P. We have our support down over here. We've actually cracked that support once more. We are cracking it right now. Again, if a weekly candle closes below that level, we can expect the price to come towards these lower levels. 32,000 would be the next target. Let's go ahead, guys, and get into Bitcoin. I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. And then really quickly, we'll talk about the daily trend. We'll be discussing what is happening on the daily trend, what the chart is looking like, the overall trend, and then we'll get into the monthly candle. Then we'll come back and do a technical analysis on the daily. Then we'll go into the smaller time frame and finish up the video. So let's discuss what is happening here. A lot of people got very bullish in the last few days. Awesome, price has gone up. We had some nice longs, got some nice profits. Really good to see. But we need to be objective. We need to be unbiased. We need to be stuck, or we need to bring ourselves back to reality with what the trend is going on. Because as the price moves up, a lot of people get overly bullish. As the price moves down, a lot of people get overly bearish. And I say this time and time again, if you are aligning yourself with being a bull or a bear, you're going to miss 50% of the opportunities. Your goal in trading is not to be right. Your goal is to make money. And if you're going to sit here and be like, I'm a bull, I'm a bear, all the bears are wrong, all the bulls are right, or whatever, you are actually just blinding yourself to 50% of opportunity. You are doing nothing but shooting yourself in the foot. Stop playing mental gymnastics. Stop playing games of who's right and wrong. This is a market. No one cares. We're here to make money. Make money, trade the trend, and stop thinking about your emotions. Stop thinking about being right. Do what the charts say. It's a game of probabilities. That is it. So what is a chart saying? Well, the chart is still showing us that we have weakness. The chart is still expressing, number one, we have our $30,000 to $28,000 resistance here. Okay, this is our major resistance zone according to the higher time frame, the monthly chart. This is in fact the lower support range. This is the yearly long support of the prior bull run top. Okay, we've seen that before. We saw a similar support all the way down in 2014 over here. We saw a similar support in 2018 over here. Every time we lose that level, we see a significant crash, significant crash, significant crash. Every time we break above that level, we see the price massively continue upwards into the next bull run. Okay, we'll come back and discuss exactly what we need to see in a second, but just giving you some overview of 30,000. So we have the very strong resistance over here. Number two, we are currently rejecting on the daily from 28,000. So we're sitting underneath this major resistance zone currently. We've just rejected from it. We are sitting underneath it as of right now. Number three, we are underneath our downtrending resistance. This downtrending resistance isn't just a resistance, this is representing the downtrend which we have been in since we established a downtrend upon that retest and rejection of 30,000. So we are still technically in a daily downtrend. We're still technically moving downwards. We have bearish momentum, momentum is moving down. We are underneath our yearly long resistance. We have rejected on the daily and we are moving downwards. So there's no reason to get overly bullish here. There's absolutely no reason to think the price is going to explode upwards until we start to see some of these bearish signs be destroyed. We'll talk about it in a second. So let's take a look at the overall trend. The trend on the daily is still bearish. We have a weak bearish trend on the daily. Why do we have a weak bearish on the trend on the daily? Because our weekly trend is still bullish. Okay, we'll discuss when the weekly trend will turn bearish in a second. So we have an overall weak trend on the daily. That is what we're currently seeing. For the daily trend to flip bullish, we are going to need to see two things. One, a break of our downtrend, right? If we want to see the trend flip, we need to see the downtrend eradicated. We need to see the price break over. Where is that resistance? It's sitting at 28,400 to 28,500. Remember that number, so we'll come back to it. 28,400 to 28,500 is the trigger point for the daily trend to flip from weak bearish back into a daily uptrend, okay? Looking at the momentum. Number two, we need to see the price of an RSI break through the down sloping resistance. This will trigger a momentum surge and this will signify velocity, volume, okay, volatility, liquidity are all now positive, okay? If these metrics of price action are positive, the price strength is therefore positive, because if we look at the price strength and we try to find how do we actually determine the strength of a price, we look at these metrics, okay? Now, what are these metrics combining? If we take the combined number of these metrics, we actually take the result of these metrics. Momentum is kind of what tells us what these metrics are doing. So momentum is a leading indicator because it suggests the strength of these metrics, or more importantly, suggests what these metrics are doing. And these metrics are, of course, a combined strength of price action. So if we want to look at what price action is doing, looking at momentum is really, really important, because momentum is leading for price action. So when we start to see momentum fall, we understand that volume, volatility, liquidity, all that kind of stuff is weakening. And if we see the price strength is moving down with it, we understand we have a downtrend. If we see price strength is moving up, or the trend is moving up, and we start to see momentum fall, we can see we have divergences, such as over here. We had rising price, falling momentum, we knew a correction was incoming. So we can use momentum to our advantage to predict what is going to happen with the price based on what the momentum is telling us. So remember, price moves based on drivers. It's not random. Price doesn't move random, okay? It moves towards specific points in the chart where there is liquidity, but what drives those moves is market drivers. So it could be economic, could be political, it could be social, okay? And we have to identify the trend strength to determine the probabilities of certain moves. How do we identify trend strength? We use metrics of price action, volume, volatility, liquidity, velocity, speed, all those things. How do we determine those? We use momentum. So use it, understand it, learn it, and get moving. So let's get into it in the macro charts. We just talked about the trend. We talked about what we need to see for the price to flip that daily uptrend. We talked about the 30K resistance. Let's talk about the weekly trend really quickly, and then talk about the monthly, because that's what we're going to tie it all up. So as we said, the daily downtrend is intact, right? We're bearish on a daily, but we're bullish on a weekly. How can we be bullish on a weekly but bearish on a daily? Very simple. If we go to our weekly chart, we can bring up our weekly chart over here. I might chuck it on the log chart. The logarithm chart, guys, the only reason I use it, because I've had a few questions, is if I'm scaling or looking at massive amounts of data, so a year plus of data, I like to have it all in view. You can see it's on log over here, but turn it off log, it goes crazy, right? It's nice to have it in log because you can see it all on your visible range a lot easier. So there's two indicators I want to bring up. The main one is, of course, going to be our 200 moving average, but I also want to bring up the Gaussian channel and the 50 EMA. So we'll bring up the moving average, which is going to be our 200 moving average. Let's go ahead and pop 200 in. We'll go ahead and change our style to orange. And then finally, we'll bring up our market cipher A for our 50 EMA. So the weekly trend is still technically bullish, or at least it is up because of two things. Now, the weekly trend is by no regards a strong weekly trend. We have to keep that in mind. The weekly trend is technically not strong, but the weekly trend is technically still up, okay? It is bullish because we're above the 200 moving average, we're above the Gaussian channel midline, and we're above the 50 EMA. However, we do not have a strong weekly trend because we are below the Gaussian channel upper band. If we break the Gaussian channel upper band, we enter a strong uptrend. Now, where does that band lay? Look where it lays, guys, around 28,500. So 28,500 once again popping up as an area of significance. If we go back to the daily chart, we can see ever since we broke out of the 25.2K level, we have been in a weekly uptrend. Okay, so look at this green arrow on the side. Look where that green arrow starts. Okay, right over here. It starts on 25.2 upwards. Weekly uptrend. Therefore, for the weekly uptrend to be into a bearish trend, the price needs to drop below 24.4K. If we lose 24.4K, we lose that breakout. We deviate above, the weekly bullish trend is deleted. The week bearish trend turns into a bearish trend, which can potentially push us back downwards. So why is the monthly candle so important for all of this? Because I just said at the start, look where we are, look where we're sitting. Remember those numbers. Remember the daily trigger point. Remember the daily trend needs to turn bullish for the price to push upwards. If the daily trend turns bullish, we have to see a break over 28.5K. If the weekly trend must turn from a weekly trend into a strong weekly trend, we must also break over 28.5K. So let's take a look at 28.5K. It is going to be the monthly open price of the prior monthly candle. So you can see now why it is so important that this candle is able to close above 28.5K if the bulls want to take control of this monthly candle. Technically, guys, in 20 hours, this candle's going to close whether we like it or not. And if it closes under 28.5K, this is going to be a bearish monthly close. If we get a bearish monthly close, that puts emphasis on the fact that we could potentially see that continuation down to 25.2K and retest the structural and technical levels in which is keeping the trend weekly bullish. If we lose 25.2 to 24.4, we enter an official bearish trend, guys, and that would be very, very bad to see. So let's talk about why we need to actually see this. We talked about what we need to see, we talked about why it's important, and we talked about the exact levels we need to actually break above / hold to see either the bearish case continue or to see the bulls take control. So let's talk about now why 30K is important. Why is it really important for the macro scheme of Bitcoin to bust above 30,000? Well, we need to see a monthly candle close above 30,000, guys, to actually restart the macro bullish trend. We've gone from a daily bullish trend to a weekly bullish trend, but we can stop there and we can go to a bearish trend. But for us to continue the trend into a macro bullish trend, a monthly and a yearly trend, we need to break a monthly candle above 30,000. We can see every time we've broken a monthly candle above that respected trend line in which we had that long 1 year long support of the prior bull run, we end up seeing a very strong move. Okay, we're talking about 50, 60, 100% move from the breakout point all the way up to the dotted trend line. Now, the dotted trend line in this instance is sitting at 48,000. Now, in fact, the dotted trend line is not a random place as well. Structurally, it is the high of the first dead cat bounce in the bear market being the red zone. So it is the high of the first dead cat bounce in the bear market. You can see the high of the first dead cat bounce in the bear market is 48,000. Every single time we see a retest of 48,000 or that respected dotted trend line, we do see a rejection. We rejected. And in this instance, if we retest, we will most likely reject again. It is upon that second breakout, the monthly candle close above the dotted trend line is where the bull market starts to speed up in its velocity, speed up in its volatility, and speed up in its volume. If we take a look at the trend angle, guys, from that base point, okay, we'll bring up a trend angle, and you probably haven't seen the trend angle used before, but we can use it today. If we take the trend angle from that base point over here to the high, we can see an angle of 65 degrees. The base point over here to the high, an angle of 64 degrees. If we take a trend angle from our bottom to that point, which is that point here, we can see an angle of 39 degrees. From the bottom to that point, an angle of 33 degrees. And from the bottom to that point, an angle of 40 degrees. So what we are seeing here is when we break a monthly candle above that high point right over here, not only do we officially enter the bull run, but that is when volatility, volume, speed, and velocity increase, which are the three metrics of price action we need to actually facilitate a trend strong enough to be classified as a bull run. I hope you enjoyed today's video, guys. I hope it was beneficial and educational so far. Videos, smash the like button, support the channel. We're going to quickly end up on a smaller time frame, and then we'll get you guys on your way because today is my day off. So I figured I might jump on and do a quick one. Anyway, short-term price action, zooming in, that is that daily trend line. We need to break above it. Very simple stuff, guys. We are technically bearish right now. Below 28,000, we are bearish. Above 28,000, we are neutral. Above 30,000, we are macro bullish. We need to start to see the price break above this resistance to flip the daily trend back upwards and push into that neutral range and push into that daily bullish range. Right now, we do have temporary support at this resistance and support range. So our prior structure resistance becomes support. Look at these highs, 3 high rejections. That area is now going to be support. If we're going to see a bounce, we're going to see a bounce at 27,500. If we lose 27,500, expect a move back towards the range low, and of course this will be classified as deviation. If that is deviation, we can see a continuation all the way back down, because if we do lose the 26.5k level, okay, we are moving back towards a retest of 26k. If we lose 26k, guys, that is going to be the verification that we are moving down to lose the weekly uptrend and retest 25.2k. Thanks for watching, guys. I'll see you guys in the next video. Have a good day.